we are delighted with our performance this last year. As you said, we grew revenue 10%, and NOI 10%, but most importantly, we grew our distributions for the first time in 6 years by 8%, and we are projecting double-digit growth in FY26. And that's really predicated on the fact that Indian office right now has never been in a stronger place. I think coming back from the pandemic, like you said, rents have grown in markets. We're probably looking at sort of single-digit rents, but what we capitalize on and our strength at Embassy is that we have access to the best properties in India's best micro markets. Last year was a record absorption year, actually, 75 million square feet across India. That's supposed to grow 10% this year, and that's anchored by the GCCs and the global companies that continue to look at India as a hotbed of talent and with the world-class real estate that companies like ours provide. So I am extremely confident in our ability to capitalize on that, which is why we're giving the guidance that we are. We're thinking about revenue growing in the double digits as well as NOI and distributions at the midpoint coming in at 10%. So a lot to look forward to, and we couldn't be happy with the results that we have right now.
You've got a lot of a very impressive portfolio of global firms who are tenants, Ritwik. Do you think global firms are increasingly looking at India as a strategic office location, and particularly evident in technology and finance? Is that set to continue at perhaps even a faster pace, given the narrative surrounding tariffs, and given in the past few weeks we've been hearing some whispers of Tesla looking to enter India, Apple shifting iPhone assembly to India from China, and of course, if and when they do come, they will need to lease office space?
Oh, undoubtedly, Sri. India is such a fertile hunting ground for global companies right now. And yes, there is a little bit of uncertainty around the tariffs. But again, it's the administration shown that it's open to negotiation. And it doesn't mask the bigger picture that India remains incredibly attractive for global companies. If you look at our largest tenant, that's JP Morgan, and the world's largest bank is doing some incredible work in our portfolio across its entire line of business. We've got companies like Novo Nordisk that's doing some stellar R&D work in our business. And I think we are very well diversified in terms of geography, in terms of location. And I think, short-term blips like tariffs will obviously cause uncertainty and a fair amount of angst in the market. But it doesn't take away from the fundamental fact that India and portfolios like ours are such attractive destinations because of the talent, because of the readiness of the population that's willing to work, do some cutting-edge stuff in technology, in financial services. And it's a population that's young, that's hungry, that's eager to work. And if you look at the kind of real estate that we provide them, it's not a surprise that we are seeing the levels of absorption and the conversations we're having with global captives the world over.
In terms of future opportunities, given the huge growth that we've been seeing in quick commerce, are there opportunities for Embassy REIT to get into logistics, warehousing, and then given the AI boom that is just in its infancy, arguably, what about data or cloud center assets in India or elsewhere?
A great question, Sri. I think fundamentally, the most REITable asset in India has been the office sector, because that's where all the rents have really been able to allow us to distribute cash and run a REIT effectively. A REIT, for the uninitiated, has two main components. One is you have to pay out 90% of your cash flows, and you must have 80% of your portfolio by value be rent generating. The office sector has been the best sector for that. Logistics in India and warehousing are sectors that do have promise, but at this point in time, I don't think give you the economics to really go out there and build a REITable platform. So I don't think that's an area we really want to get into. We do mull over data centers sometimes, but at this point in time, I think given that we've just been able to sort of put together such a robust performance on distributions, on growth, and we're very excited by the potential and the performance of the office portfolio, I think we would sort of keep our energy and our execution focus on office for the time being.